Hello viewers, this is Vibhuti. I hope you all are doing good. Today I will be taking some concepts which are important for those who want to record the transactions correctly. And if you are intended to learn this, then this video is for you. Please watch the video till end as I will tell you some steps in this video that will help you to record the transactions in a correct manner. So here are the contents. First we will discuss important steps to record transaction. In this, we will discuss some steps which are actually related to golden rules of accounting. After that, we will analyze transaction for recording. In this, we will take almost 10 transactions and analyze them and learn how to record them in the books of account. Before proceeding with the important steps to record transaction, it is mandatory that you are aware with golden rules of accounting. If not, then please watch my previous video. I have explained the concept of golden rules in detail. I have also provided the link of that video in the description box. However, just to reiterate, here are the golden rules. There are three types of account, that is personal account, real account and nominal account. And the rule for the debit and credit for the personal account is debit the receiver, credit the giver. The rule for the debit and credit for real account is debit what comes in, credit what goes out. And the rule for the debit and credit for nominal account is debit all expenses and losses, credit all income and gain. Now that we are aware with the golden rules of accounting, let's move into the main topic for today, which is important steps to record any transaction. Here we go. Our first step is to identify the two accounts involved in the transaction, which means, as per the dual aspect concept of accounting, which says every transaction affects two accounts. If any transaction or an event happen in a business which affect two accounts, for example, purchase goods for cash. In this case, if business is purchasing goods, so the goods are coming in and cash is going out. So first you have to identify the accounts involved in any transaction. In this transaction, the two accounts involved are purchase account and cash account. Once you have identified the two accounts involved in the transaction, you have to apply the second step, which is find out the type of the account for both the accounts involved in the transaction. Let's continue with our example to understand the step. Purchase goods for cash. So the two accounts involved in this transaction are purchase account and cash account. So you have to identify the type of the account. Type of the account means whether it is a personal account, real account or nominal account. So the two accounts involved in this transaction are purchase account and cash account. Purchase account is a real account and cash account is also a real account because real account covers all the assets and properties, whether it is tangible in nature or intangible in nature. Goods and cash both are real account. Let's take another example to understand this step more clearly. Salary paid in cash. So the two accounts involved in this transaction are salary account and cash account. Salary is a nominal account because salary is an expense for the business, and cash account is obviously a real account. So first you have to identify the two accounts involved in the transaction. After that you have to find out the type of the account. After that, apply the rule of debit and credit. The rule of debit and credit is nothing but the golden rules of accounting. Once you have find out the type of the account, you can easily apply the rule of debit and credit. Let's continue with the example. In our previous example, the two accounts involved are purchase account and cash account, and both are real accounts. So the rule for the real account will be applied on both the accounts. But you have to check which account has to be debited and which account has to be credited. So the entry will be purchase account debit to cash account. Let's take another example to understand these steps more clearly. Salary paid in cash. Salary is a nominal account and cash is a real account. So the rule for the nominal account will be applied on the salary account. The rule for the nominal account says debit all expenses and losses, credit all incomes and gains. So we have to debit the salary account because salary is an expense for the business and cash is not a nominal account, cash is a real account. So the rule for the real account will be applied on the cash account. So what does the rule for the real account says? Debit what comes in, credit what goes out. So cash is going out, so the cash account will be credited. So in this case, the entry will be salary account debit to cash account. So if you follow these steps, then I can assure you that you will never ever make mistake in recording any of the transaction. To make these steps more clear, I will take almost 10 transactions and we will analyze them one by one. But before moving further, I would like to tell you that I have prepared a second set of keywords which you can download from the description box below. And always feel free to drop a comment if you face any difficulty in understanding any of the concept or keywords. I will try to get back to you as soon as possible. So let's start analyzing the transactions. Our first transaction is Mr. X started business with cash. Here I would like to suggest you that please pause the video and try to do it yourself by applying those steps. After that you are done, play the video and check whether your answer is correct or not. So let's start with analyzing this transaction which says Mr. X started business with cash. Here Mr. X is an owner and whatever amount an owner invests in an enterprise is known as capital. And you have to keep in mind that every transactions are recorded as per the separate business entity concept. As per this concept, every business is considered a separate entity from its owner, which means that every transactions are recorded from the point of view of the business rather than from the point of view of the owner. So Mr. X is a separate entity from the business. So let's check what are the accounts involved in this transaction. Cash account and capital account. Let's check the nature of the account. Nature of the account is nothing else but the type of the account, whether it is a real account, personal account, or nominal account. Cash account is a real account while capital account is a personal account. Why it is a real account or a personal account? Here are the reasons. Cash is a real account because cash is coming in and Mr. X is a giver because Mr. X is investing an amount into the business. So Mr. X is a giver. So here the rule for the personal account will be applied. Which account is to be debited and which account is to be credited? Cash account will be debited and capital account will be credited because cash is coming in and capital is a personal account for the so the rule for the personal account will be applied which says debit the receiver, credit the giver. So Mr. X is a giver, so capital account will be credited and cash account will be debited. So let's take another example which says purchase goods for cash. So the accounts involved in this transaction are purchase account and cash account. As I have already explained that purchase account is used for the goods. So when goods are coming in or going out, we use the word purchase account or sales account. The type of the accounts involved in this transaction are purchase account and cash account. Both are real account. So the rule for the real account will be applied which says debit what comes in, credit what goes out. So the purchase account will be debited and cash account will be credited because goods are coming in. So the purchase account will be debited and cash is going out. So the cash account will be credited. Let's take another example. Purchase goods from Mr. Y on credit. Here the goods are purchased not for cash but on credit. So the accounts involved in this transaction will be purchase account and Mr. Y account. Purchase account is again a real account but Mr. Y account is a personal account. Goods are coming in but so the rule for the real account will be applied on the purchase account as goods are coming in And the rule for the personal account will be applied on Mr. Y because Mr. Y is a giver. So the rule for the personal account says debit the receiver and credit the giver. Mr. Y account will be credited and purchase account will be debited. So our next transaction is sold goods to Mr. A on credit. Here the business is selling goods to Mr. A on credit. So the two accounts involved in this transaction will be Mr. A account and sales account. Mr. A is a personal account while sales account is a real account. So the rule for the personal account will be applied on the Mr. A account and the rule for the real account will be applied on sales account. So Mr. A is a receiver, so Mr. A's account will be debited and we are selling the goods, so the goods are going out. So the sales account will be credited. A's account will be debited and the sales account will be credited. So our next transaction is received cash from Mr. A. We are receiving cash from Mr. A. So cash is coming in and Mr. A is a giver. So the two accounts involved in this transaction are cash account and Mr. A account. Cash is a real account while Mr. A is a personal account. So cash is coming in and Mr. A is the giver. So the cash account will be debited and Mr. A's account will be credited. So our next transaction is deposited cash into the bank. So here the business is depositing cash into the bank. So cash is going out and bank is the receiver. So the two accounts involved in the transaction are bank account and cash account. So the bank account is a personal account while cash account is a real account. So the rule for the personal account will be applied on the bank account and the rule of the real account will be applied on the cash account. So bank is the receiver. So bank's account will be debited and cash is going out. So the cash account will be credited. Our next transaction is withdrew cash for personal use. Here the two accounts involved will be drawing account and cash account. When the businessman withdraws cash or goods from the business for his personal or domestic use, it is called as drawing. So the two accounts involved in this transaction are drawing account and cash account. And the nature of the accounts involved are drawing account is a personal account while cash account is a real account. So the rule for the personal account will be applied on the drawing account and as Mr. X is the receiver, so his account will be debited and cash is going out, so the cash account will be credited. Here it's important to note that when the businessman invests something, we use the word capital, and when the businessman withdraws something, we use the word drawing. Then we never create owner's account in the books of account. So our next transaction is withdrew from bank for office use. Here the business is withdrawing cash from bank for office purpose. So the accounts involved in this transaction are cash account and bank account. Cash is a real account while bank is a personal account. So the rule for the real account will be applied on the cash account and the rule for the personal account will be applied on the bank account. So the cash is coming in and bank is the giver. So bank account will be credited and cash account will be debited. Our next transaction is received donation in cash. Here the business is receiving donation in cash. Account and the accounts involved in this transaction are cash account and donation account. Cash is a real account and donation is a nominal account. Donation is a nominal account because donation is a gain for the business and cash is coming in. So the cash account will be debited and donation account will be credited. And our last transaction for today is paid in advance to supplier of goods. Here the accounts involved are advance to supplier account and cash account. Advance to supplier account is a personal account while cash account is a real account. So the rule for the personal account will be applied on advance to supplier's account. As supplier is the receiver, so his account will be debited and cash is going out. So the cash account will be credited. So we are done with our today's session. If at any point you considered my video was useful for you, please do subscribe my channel so that you will be notified whenever I upload a new video. Do stay tuned for my next video. Until then, goodbye. Take care.